We believe advisors deserve more. They deserve as frictionless as possible tech stack. They deserve centralized operations. They deserve a team that is wrapped around them, that is highly trained, motivated, that are force multipliers for their clients and for their growth. They deserve marketing and coaching resources that are anchored around what is the business you want to build. So we are fully leaned in to this concierge level, this high touch service, removing all those pain points, operationalizing, professionalizing an advisor's business.
Hey everybody, welcome back to The Connected Advisor. I'm your host, Kyle Van Pelt, co-founder and CEO of Milemarker. And today I am joined by somebody who needs no introduction if you've been in this industry for more than 30 seconds, but this is Shannon Spotswood. Shannon is now the CEO of RFG Advisory from her recent promotion from Madam President. She is helping with the future and vision and execution of one of the fastest growing RIA platforms in our industry, RFG Advisory. She is a mom, an incredible mom at that. She is an Alabama queen, and I am so excited for her to come and share insights and knowledge about our industry and what's going on at RFG. Shannon, thanks for joining us today.
Kyle, it's so great to be with you. And down here in the deep South, calling me an Alabama queen might be fighting words. There's a lot of women who hold that crown for real.
Yeah, well, they can come fight me, not you, because you're untouchable, Shannon Spotswood. And I think I said this earlier, but congratulations again from Madam President to the newly appointed role of CEO at RFG. That's incredible.
Thank you so much. It's just been an incredibly humbling and energizing time for me. I'm so immensely grateful to my partners, to RFG's founder, Bobby White and Rick Waddell, and our expanded and new C-suite with Abby Salome and Ken Kim, and of course our board and our amazing advisors, as we're jumping off into building what we call internally RFG 3.0. It's an exciting time for us. It's an exciting time in the industry. And I'm so grateful to be stepping into the role to lead the company as we go down that path.
Fantastic. All right, Shannon, I start every one of these off with the same question, and this is not going to be any different. I have found that everybody has had different paths to this industry. Some people traditional, maybe their grandfather was in the industry, or their father was in it, or their mother, or some family member, and they just said, I'm doing exactly what they did because it's awesome. Some people have had a relatively untraditional path to the industry. But what I have found is, without fail, everybody who is in this space had a moment in their life that we call their money moment, which is a moment where they said, this is what I want to do for my career. This is it. I want to go serve people. I want to help them with their financial planning. I want to help them with their wealth management. So Shannon, what was your money moment?
As you mentioned, I'm the mother of 3 amazing, beautiful children. They're all teenagers, 19, 17, and 16. So when I tell this story now, I laugh because I realize how ridiculous it sounds. But my money moment traces all the way back to the young age of 14. So at 14, I asked my parents for a subscription to the Wall Street Journal. And I wish I could say that I had such a noble calling of wanting to serve people, but that wasn't it at all. We're talking, this is mid 80s, and I was completely fascinated by money and how do you make it and the power of money and, what is Wall Street? My father had given me Random Walk Down Wall Street and Peter Lynch's book, Beating the Street. And that led me into Liar's Poker and Den of Thieves and kind of the darker, greedier side of the industry. But I was hooked. I knew that I wanted to pursue a career out of the gate working, quote, on Wall Street. And that is exactly what I did. I started very young interning for 2 advisors at Payne Weber. So it was while I was in college, I would spend the morning at John McCain's office interning for him. And I would spend the afternoon across the street in the Payne Weber office interning for 2 advisors as I was pursuing a double major in political science and economics. So the Wall Street had me from hello, though I'll be honest, as fun as it was to kind of see a little bit of the inside world of politics, I knew that I was on a one-way street and had early aspirations of being a portfolio manager. I loved that idea of learning how to invest and how to manage money. And so from undergrad, I moved immediately to San Francisco in the early 90s, which was really the heyday of the beginning of what we all now know of Silicon Valley and just the dynamic nature of that city at that moment in time. And was incredibly fortunate. My first job out of college, I went to work for one of the very first hedge funds in San Francisco. And what made that such a unbelievable launching off point for my career is one of the very few women in the country was the lead portfolio manager at
Wow.
that firm. And she took me under her wing and she showed me how to model companies and how to invest and how to build spreadsheets and how to trade stocks. And I am immensely grateful to her for that moment. I then went and did the tour of duty in investment banking, working 100 plus hours a week and sleeping under your desk and all the crazy, stories that are true. But what made my investment banking experience, I think, really special and is one of the greatest chapters of my life is the firm that I joined was called Volpe Brown Whalen, and our logo was a T-Rex with an X through it. And we were the first investment bank focused on taking technology companies public. So we actually, shortly after I joined as a baby analyst, we took Netscape public, which was the first internet IPO. So my career in investment banking was really around defining what is the World Wide Web, what is the internet, sitting in these rooms with these early pioneers that have gone on to create, Silicon Valley and the global technology world that we live in today. So it's just an incredible place to start a career.
Yeah, I mean, there's so much to unpack there. There's so much to unpack. Well, there's a couple ways I want to go with this, but you learned about how to value companies and look at all of that and everything. Where did you kind of get the bug for the RIA or the advisory space, right? Because you're living in a hedge fund space, you're living in taking people public, you're living on this side over here that the RIAs are trying to help their clients get access to and everything. But what was your first taste of wealth management and advisory business?
After investment banking, I had the opportunity to really step into my dream job, and I became a hedge fund portfolio manager of a long-short equity fund. And that company, I was employee number 9. We were sub $1 billion. We grew very fast. Several years later, we were acquired by Nuveen Investments, which is an absolute retail juggernaut. And we were positioned exclusively as an institutional hedge fund. So we didn't know how to talk to real people. And then we were acquired by this firm that was exceptionally skilled in talking to real people. I was tasked with, what we lovingly called, how do you solve a problem like Nuveen? Because we didn't know how to really capitalize on this rich heritage and history that we had and success that we had on the hedge fund side and make it a value add for our new parent company. And so we took this innovative way that we were running money and we adopted it for the retail wealth management space and had tremendous success bringing those products to market. So I like to say I took a little bit of a glimpse around the corner into retail wealth management during that time. But in no ways did it light my fire to pursue, the seat where I am now and the incredible opportunity of what we're building at RFG. So if you allow me a little bit of a winding path, I had 3 children. My youngest daughter was born in May of 2008. In 2010, having loved the industry my entire life since I was a teenager, I fell out of love with the industry. And I think that feeling of what I've loved, I no longer do. I couldn't crawl on an airplane. I was being really mentored into a very large leadership role there, and I just couldn't do it anymore.
Yep.
And I took a incredibly hard left-hand turn pivot. I left the tallest building in San Francisco and this wildly successful hedge fund And I partnered with a woman and we built a luxury children's clothing company in a garage. So it was this, from one extreme to the other. And while I was running that children's clothing company, my husband and I decided to move to Birmingham, Alabama, and continued building that company for the first year that we were living in the South. And then after 3 years of my battery being recharged and having the success of checking every box of that business plan, my first love started pulling at my heartstrings, and I missed the world of finance. And so I put my resume together, and I spent about 4 or 5 months in deep contemplation of what would be my next chapter. I knew that if I tacked back into the industry, I couldn't go in a part-time basis. I couldn't just be a consultant. I'm an all or nothing type of personality. And what I realized during that introspective time in my life is I knit together what made these experiences unique for me, what was fueling my passion at the 2 hedge funds, at the investment bank, at the children's clothing company. And what I realized, it was a little bit of that like aha moment, is that I was on the ground floor of all of those companies. And they subsequently went on and found tremendous success and did some really interesting and innovative things. And I realized that what my first love really wasn't necessarily Wall Street. It was the intersection of talent and opportunity and the gift of building something bigger than yourself. So I titled my job search Seeking the Intangible, and that's what I was looking for. And through, I think, just, call it serendipity, call it the universe, call it, a God wink moment, Bobby White, the founder of RFG, and I were introduced through a mutual friend, and we both had it on our calendar as a filler meeting. Neither one of us were really thinking like this was it.
This is it. Yeah.
And Bobby tells the story in a very funny way. He like opens up, my resume the morning of the meeting. And he's like, well, gosh, why would I hire her? She could do my job. And he had grown RFG in the 15 months prior to us meeting from $450 million to $1.2 billion.
Wow.
Which is just a tremendous growth overnight through 2 succession-driven partnerships. He is an advisor. He remains an advisor. So he had taken, this lifestyle company and put it on the map as an enterprise operation. So he opens my resume. What would I do with her? She could take my job. And I walk in like, retail wealth management's not really my jam. I saw a little bit of that at Symphony when Nuveen acquired us. And I'll tell you, Kyle, I like every time I tell this story, I feel like it was just yesterday. Like I can feel it so clearly. But 15 minutes into our first meeting, we both canceled the rest of our day, and we spent the next 2+ hours in his office with a yellow legal pad. And the conversation that we had all anchored around what if. What if we could take the firm that Bobby had built, which at the time was really an OSJ model, predominantly brokerage, 100% custody at LPL. What if we could take that model and tear it down to the ground and build very intentionally a platform engineered to support independent advisors, where we were on the same side of the table as advisors. We were delivering to them all of the services and resources that they need to operationalize and professionalize their business, to be able to grow this incredibly appreciating asset of value on their personal balance sheet. And that was the topic of our proverbial cocktail napkin conversation. And I knew walking out of his office that day, I was like, I found my intangible, that intersection of talent and opportunity and the gift of building something bigger than yourself. So that is, essentially what led me into this, what has been the most vibrant, the most challenging, the most exciting chapter of my professional career. And I think when I say that, the best part about it is I truly believe like we're just getting started.
That's so great. Wow, there's a lot to unpack there. And we will. But also, Bobby, if you're listening to this, first of all, kudos to you for building such an incredible firm, and kudos to you for having the vision to have a conversation with somebody that you thought could do your job, right? A lot of people would be intimidated by that, and they would just be like, no, I'm not going to do this. I'm going to go try and hire somebody else. And I think that was a good move to bring that in. So Shannon, I've got to ask you, in that moment, you're having this, what if we tore this down when we rebuilt it as a platform to serve independent advisors, et cetera? Knowing what you know now as you get ready to enter this RFG 3.0 era and all of that stuff, knowing what you know now, how do you think the conversation would have changed back then if you could bring today's experience?
You want the honest answer?
Always.
We wouldn't have done it.
Because it's been such a walk in the park, right? It's super easy to just go do all this.
And I mean, I don't say that like to be provocative. I'm just being completely honest. I think part of the alchemy of that moment was I didn't know what I didn't know. I didn't grow up in this business. And Bobby has an incredible entrepreneurial, streak in him. And so our entrepreneurial energies really matched, and we lived and breathed. If it was easy, anyone could do it. And this combination of him being an advisor, we always say we're advisor founded and professionally led, and me having this outsider's experience, this institutional caliber investment management experience mixed with this, crazy touch point of being very close to a branding and marketing and highly emotional, tangible consumer experience in the luxury children's clothing world. Like, you put all of those ingredients into this soup, the audacity to dream so boldly and so big without a capital partner, just to go out there on the frontier and say, we're going to build this platform. We're going to put independence at its core. We're going to be experts at showing up and delivering, walking the walk on all of these resources that an advisor needs in order to deepen those client relationships and drive organic growth in their business. I think if I knew what I knew today, I would say what every single person said to me and to Bobby, which is, you've lost your mind. It's too hard. It can't be done. It's too much change. Your advisors will all leave. You won't be able to do it. And, part of like what I believe is my obligation and duty in the industry is not only to be a mentor and a champion for innovation and the disruptors and the dreamers and the entrepreneurs, but is to be for RFG to be a testimony to, if you link arms with talented people and you're aligned on your mission and you're just willing to walk through that trench and that valley of, if it's hard and it's worth it, you can build something that is reflective of these big dreams. No one's ever asked me that question, Kyle, but that would be my answer.
Thank you for being authentic, because that's real. I mean, I think a lot of people are going to appreciate that, because it always seems much more attainable when you're excited about it. And then you start walking through the path and you're like, holy smokes, this is crazy. So I very much so appreciate that. But okay, so we go back to that meeting. You have this. Is that where RFG 2.0, the story there begins? Is you all carrying this down and starting to build this platform again? Okay, so from that meeting, you all have gone on to build truly an incredible platform, no matter how hard it has been. My research shows that on average, your advisors on platform are growing over 19% year over year. Which is incredible. That's more than double the industry average. And there's a whole bunch of other KPIs that we could talk about, but let's talk a little bit about RFG 2.0. Like, what did you do to create something that allowed people to grow more than double the industry average at RFG rather than going somewhere else?
Our mission. We help independent advisors build their business without compromise by driving organic growth to create exponential enterprise value. And we're going to talk about 2.0, and then we're going to talk about moving into 3.0, which is the chapter that we're in now. When we set out to build 2.0, we had identified 4 foundational pillars. Pillar number 1 which is going to be like, straight to your little beating heart of technology. Pillar number one was technology. We knew that we were going to be a client experience company first, a technology company second, and a hybrid RIA support platform third. So we were going to be very tech forward, not only in delivering as frictionless of an experience for advisors to allow them and empower them to operationalize and professionalize their business, but we were going to turn that technology lens on ourselves internally and how we grow the company, how we think about selecting and hiring to our team, what resources we bring to the table to eliminate joyless, soul-sucking work and empower our team to lean into their unique capabilities to be able to scale and grow effectively. So technology is a double-sided sword for us at RFG. Pillar number two was around culture.
Yeah.
We knew that if we were going to take our advisors on this very scary, disruptive journey of change, that we were going to have to be incredibly clear about who we are. So we already had running through our bloodstream this dedication and commitment to independence has to mean something. We layered on top of it a servant heart, a growth mindset, a commitment to iteration, to excellence, a commitment to figuring it out, to active listening, to being a team of only A players, to practicing radical candor, and being willing to disrupt ourselves instead of being disruptive, being like very comfortable being uncomfortable, being focused on being an innovator. So all of that was the language of building 2.0 that continues to define who we are today. Pillar number three was institutional caliber investment management. That experience of Nuveen and taking this very institutional experience and bringing into the retail channel was just a very powerful pathway. It also allowed us to bring on our third partner to build 2.0, Rick Waddell, who is now president and chief investment officer, as well as Bobby's experience as an advisor, recognizing that clients really value having a CIO sitting on the same side of the table as the advisor to build portfolios that are reflective of their investment objectives and risk tolerance. And then pillar number four was creative capital solutions. And that was a competitive, tool that we knew we had to have in our back pocket in order to be able to recruit advisors to platform and compete against the free money out there and have resources for succession planning and for tuck-in acquisitions and for growth. So those were the four foundational pillars: technology, culture, institutional caliber investment management, and creative capital solutions. And unlike a lot of our competitors, we just put our head down. We put our head down in investing in those core competencies, building out our functional teams. We were focused on helping our advisors to grow. And while we were recruiting new advisors to platform and have really positioned us for 3.0 to turn the afterburners on and take that into the next level, we were much more, if you looked at where the pendulum was swung for 2.0, it was on walking the walk on the delivery of those services to advisors. We weren't grow it and then build it. We were build it and then grow it.
This podcast is brought to you by Turncast. We make game-changing content for fintech and financial services companies. Learn more at turncast.com.
So on that note, one thing I know I've spoken to you about before in the past that I wanted to chat a little bit about with regards to 2.0 is you are extremely passionate about making the advisors that have already selected RFG successful. And I'm not trying to throw any shade, but there's a lot of platforms out there that are only focused on going out and recruiting advisors to the platform to bring those books in. And then it's kind of like, all right, keep going or whatever. But, you've said to me in an impassioned kind of rant before, like, I have to take somebody who has, let's call it $100 million under management right now. And if I can turn them into a $150 million advisor or $200 million advisor, I've already got them, right? There's only so many, advisors we can go and recruit, and we're going to go recruit them. We're good at that. We're going to go get them. But like, my focus is, how do I take the people that have bought into our culture, that have bought into this RFG idea and make them really, really successful and help them grow in at a great clip. So talk to us a little bit about that.
This is and thank you so much. It's like, welcome to my soapbox. This is our guiding North Star for, I think, our disproportionately positive impact on the future of our industry. And we will die on the hill of empowering advisors to build enterprise value on the back of organic growth. Let me dig into that a little bit more. I'm going to link a couple things as to why this is our righteous and just fight. When you look at the data, and this has consistently been true since I showed up on the scene in 2015 and really has not changed since then, 80% of an advisor's time is spent on non-revenue generating activities. And you were actually generous in your comment about organic growth in our industry. Organic growth in our industry is 2 to 3%. If you hold those two numbers simultaneously, there is a high degree of correlation between them. I used to believe that advisors weren't growing because it wasn't their focus. And the more that we have onboarded advisors and we have leaned into the delivery of all the services to operationalize and professionalize our advisors' business, which has translated into their ability to grow organically by 19% in an industry growing 2 to 3%. It is not because the advisor doesn't want to grow. It is because there is just a general acceptance in the industry for subpar service. It rolls all the way back to the way that to your point of the majority of platforms out there, the majority of the wirehouses are all in asset aggregation mode. We are going to define our success by our AUM. And we're all guilty of it.
Sure.
We're going to hit our next milestone. We're 5 billion. We're going to be 10 billion. And we're on our way to 20 billion. Like, they're easy metrics to throw around. There's a lot of pride and maybe a little bit of ego in it. But what's interesting about that is I'm going to price my services so that I can close the deal. I'm going to make it as easy as possible to close the deal. And what is easier to sell than it's cheap? Nothing. It's the easiest sale out there. And as a result, I'm going to make all my services a la carte. I'm going to have a technology stack that is not easy to use, that is full of friction. I'm going to have a subpar operational experience. I'm going to have a compliance culture of no. And it is what it is. This is the majority of the way the industry has evolved. And this is where RFG's righteous and just fight comes in. And as we talk about being and becoming the RIA of the future, we spend so much time thinking about, what does the advisor of the future need? What does the client of the future demand? What is this generational wealth transfer going to look like? And we believe that table stakes are for an advisor to be able to show up and deliver comprehensive planning services, a well-constructed investment portfolio. But the client of the future, especially against the backdrop of increased longevity, is looking for a financial life advisor. Help me live richly, not just die rich. Help me make all of these incredibly important decisions at these pivot points in my life that will allow me to build a meaningful and fulfilling life. And the bottom line is, if you are living in a world with a subpar service experience, a compliance culture of no, technology friction, no one is listening to any of your suggestions, and it's just ring around the rosy we go, you're not going to be able to think creatively and disruptively and innovatively about how am I going to serve more people in the future. Because, newsflash, this idea that you're going to have 100, best fit clients, it's not going to be the model of the future. You're going to have to be able to serve multi-generations along wherever they are in their financial wealth life cycle, and do it profitably. So the platform that we spent 6 years building in 2.0 that set us on this path, this very beginning of building RFG 3.0, is taking this righteous and just fight to the industry where we believe advisors deserve more. They deserve a as frictionless as possible tech stack. They deserve centralized operations. They deserve a team that is wrapped around them, that is highly trained, motivated, that are force multipliers for their clients and for their growth. They deserve marketing and coaching resources that are anchored around what is the business you want to build. So we are fully leaned in to this concierge level, this high touch service, removing all those pain points, operationalizing, professionalizing an advisor's business. And the proof is in the data. Yeah. So our advisors that are fully leaned into all of those tools and resources, who are telling their authentic brand story, leveraging podcasting, leveraging social media, doing all of the events and seminars, are outsourcing their investment management, are not spending, and that's a whole nother thing we can talk about, not spending at a minimum 10 to 12 hours a week on just portfolio trading and cleanup activities. But if we're completely honest, probably 50% of their time on this, investment management activity, they're not growing.
Yep.
They're not growing. So what we want to build, and we are not the best fit for every advisor. Those advisors who have a growth mindset, who want to leverage tech and talent and tools to be able to deliver an exceptional client experience, who believe in the future of our industry, those are the clients that are attracted to us. So we want to, in equal parts, be able to support our existing advisors on their growth journey. And then we want to attract the future advisors of our industry who are willing to lean in on that and believe that the noble work that they do needs to be unleashed from all of this incredible inefficiency that exists in our industry today.
Yeah. So well stated. It was years ago, and I know he says this a lot, but Jim Bowen from First Trust says all the time, like, advisors are noble people. Like, this is a noble profession, but in so many ways they've been left to figure everything out on their own. And then it seems like you have these people like you're talking about who are like, oh, no, we're going to help you. But really all they do is kind of just do compliance for you or whatever. And I think you're so right. The other thing is the data is undeniable that the demand for financial advice is up and to the right. And this is not just from people who have no money. It's from people who have plenty of money and who are looking for true, real advice. And you have to be able to serve more. So, I love that vision. Let's talk a little bit about what 3.0 looks like, right? So you've built all of this foundation for 2.0. You have this incredible culture. You've proven that you can take an advisor that works with you and make them successful. Maybe not quite to where you want it to be, but you've been able to remove quite a bit of inefficiency for them to unleash that noble work that they're doing. Now you've got some additional fuel in the rocket, and a story to tell. So what does 3.0 look like? And I know you're in the early throes of it, but tell us a little bit about the vision for RFG 3.0.
3.0 is really, get on the rocket ship. My partner, Rick, has a great saying, which is when someone offers you a seat on the rocket ship, you don't ask aisle or window, you just get on board. As we just talked about, we believe that our industry is in the very early stages of its next evolutionary phase. And what's so exciting about our industry is it is relatively young. I mean, these are first generation business builders of the advisors who are looking to retire. And we have the trillions of dollars of not only stock market value that needs to be transferred, but all of the equity that is in real estate and in family businesses and large scale businesses. Like there is so much wealth that is going to be uncorked as we move through this generational wealth transfer. And so for RFG 3.0, we're immensely grateful to have partnered with Long Ridge as our growth capital partner. There is zero daylight between the way they see the industry and the way we see the industry. This belief that advisor independence means something, that we want to walk the walk on showing up and delivering this exceptional client experience to them so that they can in turn grow their business and serve their clients, that we believe very strongly in the power of technology to remove operational compliance and technology friction to unleash and uncork that growth, that people connect with people, and allowing and empowering and supporting advisors to tell their authentic brand story. One of my favorite stats that I always quote is from an Accenture study. And they asked all these clients, what do you value most in your advisor? And the answer is, number one, do you share my values? Number two, do you get me? And number three, do I want to spend time with you outside the office? So leaning into that authentic brand story. So 3.0 is about this very bold vision of what the future of our industry looks like, what the advisor of the future is going to need in order to serve that increased number of clients and increased complexity that is inevitably going to materialize as a result, not only of the generational wealth transfer, but of a dynamically changing world of longevity, of AI, of everything that is happening. Like, we're just living in a moment of time that is wildly exciting, but wildly disruptive. And as a result is change. And that change is scary. So first up for us is building the team of professionals, double clicking on that advisor founded, professionally led. We've been so just immensely blessed and grateful to attract, Abby Salome into the chief growth officer role, Ken Kim into our CFO role. We've added Brendan Frazier as chief behavioral officer to our investment team. We've hired 20 additional people since the beginning of the year to build our growth flywheel team, adding additional resources in technology, in finance, in operations, in compliance. And we're not done yet. We continue. We have multiple roles still open. And if everything goes according to our BHAGs and our 10X is easier than 2X goals, we want to have a disproportionately positive impact on the industry. We want to demonstrate that those advisors who want to grow their business, who want to create this asset of value on their family's balance sheet, that we can show up and deliver the coaching and the tools and the resources in order to do that, that we can attract that advisor that is going to be defining the future of our industry. And that's what 3.0 is all about. We are not an aggregator. We are not an integrator. We are an innovator in the industry. And we just believe so strongly in that there is never been a better time for a model that is honoring independence, that is serving advisors. And we have this incredible good fortune, I say this all the time, of standing on the shoulders of giants. Like, there has been so much private equity and so many amazing companies. We have these incredible competitors, and I have so much respect for what they've built, and they will continue to be incredibly successful and fill a need in our industry. 68% of the assets are still all in the wirehouses. The pathway to independence is wide open. And in our, little sliver of the universe, we just want to be the platform that is walking the walk on supported independence to build businesses. And part of that, Kyle, if you tie it back to where we started, this is a shared thread for not only me and our entire team at RFG, but our advisors. We're builders. We're servants.
Yeah.
We like to build something bigger than ourselves. The call to serve, that service above self, that is what unites us all and what drives us to get out of bed in the morning and, come into work. And I think that as long as we can keep our eyes just focused on that North Star and really honor that we're doing things differently at RFG than the rest of the industry. And that's always been the case since, since Bobby decided to triple the firm through 2 succession-driven partnerships and be open to this idea of tearing the entire house down. We've never shied away from get comfortable being comfortable, and you'll never be uncomfortable again.
Oh, I love it. I love it. All right. So we've talked about the journey of RFG and where things are going. I'd be remiss if I didn't ask you a little bit about this, because I know it's something we've talked about. So you've got all of this stuff going on. You've got advisors that you're trying to serve. You've got this team that you're trying to take care of. You've got, many facets to the platform and the business, and you're sitting in this chair trying to drive it. I'd be remiss if I didn't ask you about the pain and inefficiency of getting the data at your fingertips to make decisions about how to grow the firm and drive the firm and doing all of those things. So talk to me, Shannon, about what it's like of being a leader of a firm like this and trying to get access to data for strategic decisions to help RFG 3.0 be successful, and then share that data with other people who care, like a Long Ridge or things like that.
Oh my gosh, it's such a great question. I'm going to come back to the answer, but I'm going to start with just like waving this flag. It is absolutely mind-boggling that we live in the world we live in with the amount of inefficiencies, whether it's through the integrations of technology solutions, how we're opening accounts, how we're helping advisors to become independent and doing wholesale, full-scale transitions. The fact that a NIGO exists, like this is where my outsider brain still explodes. The number of minutes in every single 24-hour day across our industry that we are duplicating effort on solving the same problem over and over again. Like that's a whole separate podcast, but it is shocking to me. And coming back to your question around data, when we set out to build RFG 2.0 and we said we're a technology company second, that continues to be an incredibly important like elephant intentionally in the room, where we are always asking ourselves, how are we running this business? How are we scaling this business? How can we make smarter decisions? What do we need to stop doing? What do we need to start doing? What do people hate about their job? How do we eliminate it? You know, I believe we're at the very beginning of what is going to be possible as we think about building data lakes, as we think about having data at our fingertips for not only making strategic decisions as it relates to the business, but helping advisors. You know, we very intentionally, and this is with some coaching from your partner, Judd, very intentionally have moved away from calling it an advisor's practice to an advisor's business.
Yes.
And in order to run a profitable business, our target is for the advisor's EBITDA margin, after all their expenses, after platform fees, after everything, is 60%. 60%. That's what we're striving for.
Yep.
That's where our most operationalized advisor businesses are operating. Well, the only way to scale that is to have the data, to be thinking about RFG as a platform through that lens of business and thinking about our advisors through the lens of business. And what it requires, and this is where it's so hard. And I was really grateful to this experience as a hedge fund manager. There is nothing more brutal than running a hedge fund. You are told every single day, more often than not, you suck. You suck. You made the wrong call. You haven't generated the alpha that you need to generate. And when you do generate the alpha that you're supposed to generate, you're just doing your job. So you have to live in this mindset of, if today was day one, what would I do differently in that portfolio? Would I make the same decisions that I have made up until this point? And we all are guilty of wanting to not look honestly in the mirror and disrupt ourselves. It's too hard. It's too inconvenient. It's going to be too expensive. It's going to be too costly. I'm worried about the fallout. People are going to be mad at me. I'm going to admit I made a mistake. I don't want to look at myself and tell myself I suck. And this is what is required right now as we think about next gen technology, as we think about data, as we think about building data lakes and dashboards that are very reflective of the KPIs in the industry, the KPIs in your company, the executive priorities. What are you driving towards? And we're a long way from me being able to say, like, it's done and dusted and we've built the, most amazing thing ever. We'll probably never get there, because one of our cultural attributes is iterate to excellence.
Yep.
We believe there is no end. We believe it is part of our responsibility to constantly disrupt ourselves in search of what is a better way to do this. And more often than not, that comes from actively listening to our clients and then doing something about it. So I think that there is a tremendous first mover advantage in how you structure and think about your data, how you're getting those pain points out, the days of living in spreadsheets and not leveraging AI are about to be behind us.
Yep.
It is going to be really hard. It's really, really hard to walk away from tech you've invested in, to go through the valley of communicating change. But it is going to be the difference maker between winners and losers. And I'll tell you, like in my own personal, what we're building on the advisor experience front, it circles back to where we started on holding these two facts simultaneously. So the Domino's pizza tracker, which is like the greatest technology invention of all time, the Domino's pizza tracker on a weekly basis, how are you spending your time? And then what are your growth goals for your business? And are those two lining up?
Yep.
And that is infinitely doable in the near future.
Yep.
And that is but the tip of the iceberg of what I think is going to be possible as we think about data as an asset as opposed to an afterthought.
So well stated. I love it. No additional comments. Shannon, as we move to our final segment of the show, we could go for hours on all of this. So maybe we'll just have to have you back on the Connected Advisor and talk more. But the final segment of our show is called the Milemarker Minute. So this is just a series of lightning round questions, more lighthearted and fun. The goal is to try and get all the questions answered in a minute or less, but I'm not going to hold you to it. But are you ready for the Milemarker Minute?
I can talk fast.
All right, Shannon, I know you've had the privilege of doing quite a bit of travel, but where is one place in the world that you have not traveled to yet that you are dying to get to?
Lake Como.
You know what's so interesting? Somebody else just said the same thing. So apparently that's a hot spot. Lake Como, Italy. That's awesome. What is the best book you have read in the last 12 calendar months?
Amp It Up.
Amp It Up. Oh, by Frank Slootman. We're big Snowflake fans and partners here at Milemarker. So everybody go check out Amp It Up. It is actually a really great book. I believe, you can correct me if I'm wrong, you had the opportunity to go to the Taylor Swift concert with some family over the past year. What can the industry learn from the Taylor Swift Eras Tour?
Women run the economy.
There you go. And last but not least, what is the best part about living in Birmingham, Alabama?
Roll Tide.
Man, what a way to end. Although I disagree, go Dogs. But I got to give it to you there.
I only had a minute, and it just says so much.
Shannon, thank you so much.
Although I have to throw in, I'm now hotty toddy, right? I got a daughter at Ole Miss.
Oh, yeah. So
there's a hotty toddy Roll Tide fight in my house, and the checks are going to hotty toddy, and there's no place better than Oxford, Mississippi. So
tailgating in Oxford, Mississippi is quite the experience if you've never done it before. My favorite is the red Solo cups on crystal stemware. That's pretty special. And I do believe that wherever the checks go is where the sports allegiance go. So that's awesome. Shannon, this was incredible. Thank you so much for your time and your insight today. You always bring the energy, which is great, but you dropped a lot of, as my friend Tyrone Ross calls it, free jewelry today. So thank you for dropping that free jewelry. I hope the Connected Advisor community picks that up off the ground. I'm just very appreciative of you gifting us your time today.
Thank you so much, Kyle. I loved it. And please be sure to follow RFG on LinkedIn. I'm on LinkedIn, on Instagram. We would love the support. And I'm always here if anyone wants to, get in a little bit of a fisticuffs about what the future direction of the industry is. Let's mix it up.
There you go. All right, everybody. That's been another episode of the Connected Advisor. Please make sure you click follow or subscribe wherever you are listening to this so you don't miss the next one. But until then, I hope you have a great week and you take care of yourself.